The Rebel Capitalist Show.
You had this video, maybe 20 minutes, on how you saw some potential, let's say, for a real estate crash. When I mean real estate, I mean residential in 2021. And you really, but you didn't just say, oh, here it is, and just kind of make it, sensationalize it. You gave data points, you used charts, you went to specific websites and said, this is why. You kind of built a case and a story. So can you kind of give us the Reader's Digest version of that video?
Yeah, I'm happy to. Thank you. By the way, I really have enjoyed this. Since COVID hit, man, I was like, hey, let's get going on this YouTube channel. It's been going nuts. And I love it. But so to answer your point, when we invest big money into property, wherever it is, George, I have to know everything. I have to know what the schools are like. I have to know if the employers are moving in, moving out, if they're contracting, expanding. I want to know everything. I want to know house prices. Those are all what I call our must-haves on any particular market. And so when I look at whatever it is I'm looking at, I'm all about the data, the demographics, and the migration patterns on where people are going. And you can find that stuff at a state level, a city level, even a submarket level, if you really, really do your homework. And so the reason why the reason why I did that video is because I think everybody lumps real estate into this big bucket as if it's one thing, and it's not. It's like saying stocks are one thing. And so what I saw and what I still see is the reason. I don't blame people. Nobody wanted people to go through their homes during the pandemic, and so everybody, the listings, just the listings, dried up. And so I think there's like 2 months of listings or something. I read the other day that there's like 4 real estate agents or 5 to 1 listing or something. It's something crazy. So, so that's a supply demand thing. It's just that simple. And so there's a lot of people chasing a lower supply. Of course, it's going to drive prices up. And then, you throw the low federal funds rate and the interest rates on top of that. It's just going to it's going to get hot. That's okay. But recognize it for what it is. That's all. And so as people are moving around, and they are, everybody's kind of picking on these big urban centers, and there's nothing wrong with that because they probably deserve it. And people are moving out of those places, but they're blowing up these submarkets, and some of them are in other states, some of them are right next door. And so my point was, that doesn't necessarily mean that it's going to continue, but the bigger thing for me was taking real notice on the 2 things that I follow, which are mortgage defaults and evictions. And so right now we know today there's at least 12 million people that owe around $6,000 in rent, period, right now. So and so they're all kind of hanging on. So you got 12 million people that are going to probably hit at some point in next year. So you have that disruption, and we could talk for an hour on that. Who knows where they'll all end up.
And they on average they owe $6,000 on their mortgage.
On their rent.
On the rents, okay.
Yeah, on their rent, and then jump over to I go to Mortgage Bankers Association or Black Knight are the 2 that I really like. Okay. You look there. There's 4 million people that are in the process of some kind of forbearance or default. And so you have these 2 big things happening at the same time. And all I'm saying is I think that we're going to see a lot of listings next year. And here's why. I think the vaccine is going to relax some of the things, and people have had a nice little run up, and maybe they're behind, maybe they're not behind. But I think you're going to see a lot more listings, at least people that would have listed last year. And they want to move or whatever, get nearer their family, or maybe their jobs are dislocated or whatever. I think you're going to see that. So I do think you're going to see all this listings happen in 2021. I think it's going to be crazy as people try to scoop whatever equity they have, pay off whatever they owe.
I'm sorry to cut you off, Ken, but that was a really interesting point you made in the video, that a lot of people, because the unemployment rate will potentially get higher because all these businesses going out of business once this stimulus runs out, and you've got all these unemployed people that may have quite a bit of home equity because the prices have risen so much. They're going to want to cash out because they don't have a choice. That creates more supply coming online.
100%. So they're I call it house rich, cash poor, and you know, and also, you know, a chance for a new life. If they've got, let's say they live, you know, near San Francisco and they work for Twitter. Well, they're gonna, you know, they probably have a lot of equity moving, I guess. They're gonna move an hour away or maybe to another state, and if Twitter allows that, and they're gonna buy something for half. They're gonna have all this cash and they're gonna be fine. So all that's happening right now. So that's gonna be a listing. And then in addition to that, I believe that you're going to see this forbearance it has to come to a head soon. These people owe money, they owe rent, and they owe mortgages, and at some point, somebody's going to pay for that. You know, it's either going to be the bank, it's going to be the landlord, it's going to be the resident, it's going to be somebody, and a lot of that's going to make itself up into Wall Street, as you know, because a lot of those loans are sold off. And so there's a lot of landlords I know that own homes that are not getting rent, and they're trying to work with their lenders. And by the way, there's private lenders and government lenders, and so the government lenders are under the CARES Act, but the private ones are not. Right. And so, you know, there's a lot going on right now, and I think, you know, and I really think that the spike in the cerveza that you call it, and the spike in that, and then the vaccine, you know, there's gonna be a lag on the rollout. You know, we're gonna have another bad year, and these businesses that are just been hanging on, maybe bleeding cash, I don't know, it's gonna be a lot worse next year.
The release valve is home equity. That's what you got on your balance sheet. That's the liquidity, let's say, on your balance sheet that you can access in when times are super tough. And there's low supply because no one wants to sell their house. But when people do want to or have to sell their house, you get more supply. You gave a couple tips at the end of the video for people that might, again, you went back to the point that real estate is local for the most part. And there's a couple times, every once in a while, you get real estate all going down at once, but that's very, very rare. So real estate, and you even said in 2021, you don't see it going down in unison like, let's say 2008, 9, 10. It's going to be local. But the tips that you gave were, number one, check inventories. And then I think you used Zillow as a reference there. And number two, make sure that you're always aware of the inflows and outflows of population within the region you're looking to buy or sell. And you had some really cool kind of things that I never would have thought of. One was you look at the driver's license. Yeah. Or how many people are turning in their driver's license in, let's say, Boise, Idaho. That means there's more people moving there because you have to get a new license, the local license, within 30 days or something. And then also you gave a website for like a moving company, like a national moving company. So you can see where people were actually moving to state by state. So can you walk us through those little secrets?
Well, I'll tell you what, we'll put that up on Ken McElroy and Tom, KenMcElroy.com, a rebel capitalist. How's that? And then we'll put the tips up for your people. If you know, I might as well do that. But yeah, so here's the thing. Again, back to the data points. U-Haul. You know, if somebody rents a U-Haul from New York to Phoenix, it's a data point. Period. Same with North American Van Lines. Same with Atlas Van Lines. You know, same with all those companies. So those are really, really, in my opinion, low-hanging fruit. You Google that right now, it's going to come up. You're going to see where all those U-Hauls go, whether they're one-way, two-way. Typically, they're one-way, but those are really important. The post office, you know, when you go and you register, you change your address and all that, that's all up on the government website. The as I mentioned before, the Department of Motor Vehicles is another one. And you know, and now this is kind of creepy, but now they're doing it with cell phones. Like like it or not, if you and I were talking before here, we might go skiing somewhere, like let's say in Utah. There's people that know we're in Utah. We have our phones. So there's a lot
of about that, Ken. Don't get me going.
Yeah. So there's that too. Like you can kind of see, like our cell towers getting pinged here. So that's all data that, as people are moving around and they're going to be in places permanently, that's all really, really, really good data, George. And that's the kind of stuff that you want to look at, in my opinion. You want to be ahead of it. You don't want to be a pioneer. You want to be where people are going, and you want to be there in the beginning if you can be.
Yeah, for sure. So long story short, Ken, when we go skiing here in Utah, if I show up without a cell phone, you'll know exactly why.
You need a burner phone, and you need to keep your back in Phoenix.